This week, Pan American Silver released their full year 2025 financials, and the market took notice. Record cash flow, surging net earnings, and a massive 29% dividend hike. Welcome back to Intrinsic Insights. Today, we are putting Pan American Silver, ticker symbol PAAS, to the test. We're stripping away the market hype and looking at the raw fundamentals, the balance sheet, the all-in sustaining cost, and what this company actually yields. Then, we're going to run the math on what happens to PAAS at bear market prices, current prices, and extreme bull targets of $120 and $200 an ounce. Let's dig in. Let's look at the actual business results. PAAS just posted a record $1.2 billion in free cash flow for 2025. Q4 net earnings came in at a staggering $452 million. But the headline that really matters to value investors? A 29% increase to their dividend. This is their third consecutive hike. This isn't a speculative explorer burning cash. This is an established operator returning capital to shareholders. The undisputed MVP of this report is their Quanosipio mine, which dramatically outperformed expectations and pulled their Q4 silver all-in sustaining cost, or AISC, down to an incredibly lean $9.51 per ounce. To evaluate a miner properly, we have to look at downside protection before we look at upside leverage. An AISC of $9.51 per ounce provides a massive margin of safety. Now, to remain unbiased, we have to acknowledge the risks. PAAS operates heavily in Latin America, meaning you are taking on jurisdictional and political risk. You demand a premium for that risk, but at a sub-$10 production cost. PAAS has built a financial fortress that can weather severe sector downturns without diluting shareholders to keep the lights on. So, what does that leverage actually look like? Let's run the matrix based on that $9.51 AISC. First, the bear scenario at $18 silver. If the bottom falls out of the market, PAAS is still highly profitable. Clearing roughly $8.50 per ounce, they survive while higher-cost producers go bankrupt. Next, the average or historical scenario at $24 silver. PAAS is incredibly comfortable here, clearing over $14 per ounce and easily sustaining that new dividend. Then we have the current market, right around $30 silver. This is the cash printing press we saw in the 2025 report. They are clearing $20+ per ounce in pure margin. Now, the bull scenario at $120 silver. Here is where the math gets explosive. At $120, their margin jumps to over $110 per ounce. That is a 5x increase in profitability from current levels, meaning immense free cash flow generation. Finally, the extreme bull at $200 silver. At $200, PAAS is clearing $190 an ounce. At this stage, the dividend payouts and share buybacks would be completely detached from the current share price. The takeaway is simple. Pan American Silver is currently operating as a high-margin business with a built-in safety net. If you are a contrarian looking for a producer that pays you to wait for higher metal prices, while offering explosive leverage if silver runs to 3 digits, PAAS has proven they have the operational discipline to execute. Do you think PAAS is the best pure value play in the silver space right now? Or are you looking at higher risk, higher reward developers? Let me know in the comments. Hit the like button if you appreciate unbiased fundamental analysis, and subscribe for more. See you in the next one.